Hey everyone, and welcome to this Thursday, September 12th edition of FreightWaves Now. Up first, Nick Austin with a weather update and a potential tropical development.
Welcome to FreightWaves Weather, your Thursday edition. I'm FreightWaves Meteorologist Nick Austin. Got to talk about some more severe storms today. We're also going to talk about the potential for some tropical cyclone development. That's right, the season is not over. But first, we're going to go up to parts of the plains and Midwest today where we have some really good potential for severe storms, a lot of messy weather, and some nasty severe thunderstorms that could develop anywhere in this yellow region right here. That could be anywhere from around the Texas Panhandle all the way up towards parts of the Dakotas, over into the Great Lakes. So areas like Des Moines, down towards Kansas City, up towards Minneapolis, Rochester, Minnesota, the Quad Cities in Iowa, places like that. Maybe even over towards Chicago and Milwaukee. We could see severe storms producing a lot of large hail, which they did yesterday in some of these areas across the country, as well as very heavy downpours, some localized flash flooding. We might get some roadblocks here and there on some secondary roads, some interstate routes, some intense winds too. Not everywhere in this region. They'll be scattered across the area, but from time to time, drivers will be delayed out there from some of these severe storms, and particularly across parts of southern Minnesota and then in northern Illinois, parts of Wisconsin. There could really be a lot of flash flooding, even from non-severe thunderstorms, particularly in that part of the Midwest and the Great Lakes. But again, localized flash flooding can't be ruled out in some of the other areas here in this yellow shaded region where a lot of the severe storms will pop up. We're going to head out to Montana now because there's one part of that state, Big Sky country, where there could be a lot of flooding along the Milk River. This is mainly river flooding. It's going to affect areas north of Interstate 94, the northeast corner of Montana, because the same system that's going to bring the severe storms and possibly flash flooding further to the east is there's going to be a lot of heavy rain spinning around that system back here into Montana, areas that have seen a lot of rain already in recent days and weeks, and the ground is already saturated, so there'll be a lot of runoff and potential river flooding. Now we're going to go out to the Caribbean. We have the potential for a tropical system to develop. That's right. Right now it's just an area of investigation, as the National Hurricane Center calls it. It's right here near the southeastern Bahamas. But over the next few days or so, there's a really high chance, at least a 70% chance, that this particular system will develop into a tropical depression or possibly the next named tropical storm. It may move across South Florida, then into the Gulf, or it could move to a similar track that Dorian did along the southeast coast and then towards the mid-Atlantic by late next week. The path, the intensity, still a lot up in the air, but we're going to continue watching at least the potential for the next named storm over the next few days. That's what you need to know about your weather for your Thursday. Have a wonderful day and be careful out there.
Hey everyone, and welcome to the AT&T Business Carrier Update. I want to jump in and talk about our headhaul index. So the headhaul index, it measures the outbound minus inbound volumes in a given market. If you have more outbound than inbound in a market, that's going to reduce the supply a lot faster than you would if you had a lot more inbound than outbound. The inbound surplus is what we call a backhaul market. An outbound surplus is what we call a headhaul market. Over here on the right, you'll see a chart of the weekly change of headhaul index values. Anything that's got a positive headhaul value is going to be a headhaul market. Anything over here with a negative headhaul value, such as Charlotte, North Carolina, is going to be a backhaul market. So paying attention over here to the right side of the chart, I really want to focus on some of these increasing headhaul values. These are significant values that are increasing in some of our biggest markets. Savannah, Georgia, Memphis, Tennessee, Ontario, all some of the biggest markets in the country have exceeding outbound volumes right now. Let's go ahead and focus in on Harrisburg, Pennsylvania on my next chart. And you'll see that over the last week, we've had tremendous outbound volume increases, tightening capacity in this area. This is one of the top 3 markets in the country right now in terms of outbound volume. So any kind of significant surge of volume is going to have a real impact to capacity, especially around the Pennsylvania area. We've been monitoring a lot of port activity, a lot of stuff coming into the country right now, especially around the Elizabeth, New Jersey, and Savannah and Los Angeles. So if we go to my next chart, I want to talk about Savannah a little bit here. This is the outbound tender market share for the Savannah market. Typically you see this kind of trough on the outbound tender volume index due to the 7-day moving average of the index. So it's going to trough out because we have lower volumes on a Monday. That does not happen on a market share index. This right here is due to Dorian. Dorian had everything shut down for a little while the hurricane passed over the area. And we saw these surging volumes return towards the end of this week. So that's going to be real interesting because, as you saw with Nick Austin, we do have another potential disturbance coming next week, early next week. So something to definitely pay attention to for carriers operating in this market.
Hi, I'm Anthony Smith, Market Expert and Economist here at FreightWaves, and today we're going to look at the PPI, or the Producer Price Index, and we're going to look at the outbound tender rejections in our own internal Sonar software platform. And so, quick overview on the Producer Price Index. It generally measures the price changes that producers receive. So when producer prices go up, in a broad-based economic growth, we see those prices being passed on to the consumer. In times of economic contraction, a lot of times these producers might decide to eat those costs because they are trying to maintain margins and market share. Now, when we're looking at the PPI here for general freight trucking, we see that the latest numbers in August was generally flat. We also see this, for example, in this orange line here, we have a pretty close relationship in times of spikes when there's a upward movement for the PPI, in the yellow line, and upward movement for the refrigerated outbound tender rejections, which is here in the orange line. Now, what that's telling us is, for example, here we have this spike in July. This is generally known as produce season here. There's a spike in spot market rates because capacity is really tightening up for those drivers, for those producers. And so we see the upward movement and the rejections that tells us that capacity is tight, increasing prices, and that's really going to drive up what we see here in the PPI for general freight trucking as well. And so when we see that there's this close relationship tied to each other, we see that our own internal Sonar indices here can really become a leading indicator for the PPI, or the producer prices that we can expect in the coming month. And one of the examples here is that we see here is with our 3 outbound tender rejections indicators. One of the really cool things is that because it leads on a daily basis and it leads those monthly outputs, we can really see what's going to happen here in the fourth quarter or going into the fourth quarter. And so what we're seeing right now is some upward movement here in this orange line, as I mentioned, the refrigerated outbound tender rejections. And that's telling us that we can probably expect some upward movement going into the fourth quarter for when we're looking at capacity and spot market prices as capacity really starts to tighten up going into the next month and really over onto the fourth quarter. So this is something that we're going to monitor closely in the coming months, in the coming weeks, and as we close out the end of the year, especially as tariff uncertainties seem to change, modulate on a day-to-day basis, but we will be sure to keep you updated here at FreightWaves Now.
All right, up next we have Donny Gilbert giving us a broker update about capacity in the rest of the country. Donny, what do you have for us today?
Well, today, Zach, I brought you, it's the drive-in tender rejection rate map, but this map's a little bit different. This is the change over a 1-month period. So before we've gone through, we've looked at the reefer maps, the drive-in maps, but this is looking back at 30 days and what's happened from 30 days ago to right now. What markets have increased and what markets have declined.
So tell us what does the blue and red mean again,
All right,
just for those that don't know it?
We'll start with the white. The white markets have stayed pretty well neutral over the 30 days. So the tender rejection rates haven't really gone up or down. As the tender rejections rise, they start turning a blue, and of course a darker blue the more they've increased. If they've declined, they start turning shades of red. The darker the red, the more that they've actually declined. So this tells us really what's happened over the last 30 days. Have markets increased, decreased, and this is a good way to look at it versus just looking at your daily maps.
So what markets do the brokers need to look at today?
Well, we'll start out in the southeast just because I saw Florida turn a little bit of blue. It's impressive to see Florida picked it up a little bit. But, of course, Florida's still a huge backhaul market. It's a backhaul market 11 and a half months out of the year. Sure. But, you've seen it pick up here a little bit. You've seen a few spots here on the coast here. These have turned red. They've gone down in the last 30 days. Of course, we do know the storm effect that came through here. We got a lot of trucks that moved into this area, a lot more capacity. Therefore, tender rejection rates were pushed down. So in 30 days, these have actually declined. Okay. But here through the Midwest, this is where we've seen a lot of our growth. and through all the way through kind of part of the open plain area, these tender rejection rates have increased, while when we get out in the open plain area, these areas have actually declined. So these are kind of getting down to almost a backhaul market. This is where now you're looking at moving these trucks from here into the Chicago area, into the Midwest. That's what they're trying to move into, where the volumes are higher, maybe down to the Memphis area.
But those are increasing rejection rates, though, so there's potential for increased rate pressure, correct?
In the blue areas here, yes. The red areas down, we will move from red to blue.
Right.
That's what we want to kind of look for. Red to blue, move your trucks to the blue.
Gotcha.
On the West Coast over there, we still got a lot of white. Those markets have been pretty well mute. There in the mountainous areas of east of the West Coast, Salt Lake City area, we've seen a lot of growth in those markets as well. Okay. So blue's good, red is declining, move your trucks to the blue.
All right.
I want to dive into one market though. Let's look at Wilmington. Wilmington is very interesting. We've seen a storm come through there, and this is a good way to look at the effects here. We're about a week after the storm right now, and coming into the storm, we're going to look at the outbound tender volumes first, and then we're going to compare the dry van tender rejection rates, the outbound versus the inbound.
Okay.
So here we have our
blue line is the tender volume index.
Yes. And my red line is outbound, and the yellow is inbound. This is dry van only.
Okay.
So moving into the storm, this is where the market was right here.
Okay.
Of course, when the storm starts to move in, people start to evacuate, shippers start closing, and we see a very drop in volumes for our outbound tender volumes. That was expected.
Big drop in volumes, increasing tender rejection rates going into the market.
Yes, into the market
Right.
is increasing. But see, as these trucks start to move in, we see here, this is our outbound. These are trucks trying to get out of there.
Right.
Give me some freight, give me something. I'd like to drive out of there with a load versus drive out of there empty. So they're willing to drop their rates, at least just to pay for the fuel and get their equipment out of that area, or they might just end up moving them out of there. And if they're just avoiding the area, they might move, 50, 100 miles in and then come back.
Right.
And that's kind of what we've seen with our tender rejection rates for outbound. They're just going down, down, down. And right now, with the trucks heading into the market for relief efforts, of what relief efforts they are having,
right.
It was a hurricane. It wasn't too strong, but there was damage done. There was actually a lot of tornadoes that hit the area before the hurricane came in.
Yeah, there were.
Between Myrtle Beach and Wilmington,
That's right.
had a lot of 3 or 4 or 5 tornadoes hit, which caused a lot of damage. So as these go down, drivers are reluctant to go into areas that have a lot of damage,
For sure.
storm damage. So when they do, they start driving their rates up because they know the outbound rates are going to be very low.
Okay.
This is where we see our inbound tender rejection rates coming up. They peaked up at almost 10%, and they've settled a little bit back to about 8.5%. So here's where we see, if you're going into the Wilmington market, they're increasing their
Increase the rates.
If you're a broker, even the Wilmington market, but also look at all the coastal markets, Savannah, Charleston, Wilmington, you need to increase your rates a little bit because your outbound rates are going to be very low. So a carrier's going to know this.
Right.
They're going to charge you going in and then look for a load to get them out of there.
Volumes have started coming back up just in time for another storm potential to hit next week.
Oh, I hope not.
Right.
But it's always there.
All right. Good information, Donnie. Make sure to hit that subscribe button on YouTube and follow us on all our social media outlets, Instagram, Facebook, Twitter, and LinkedIn, and have a great Thursday.